Well, welcome to our presentation, Beneficial Ownership Reporting Requirements. We're providing this as a resource to our clients just because we've gotten a lot of questions on this subject, which is understandable because of all the changes that we've seen recently with these requirements that the U.S. Treasury is now requiring that have affected many of our clients, but also the general public and most business owners. So we wanted to make you aware of them in an easy to understand format and also give you the resources so you could research them yourselves or even file these on your own. But we are offering to file for our clients the initial filing just to provide that value. And I'm going to be going through an overview of what the new filing requirements are so it's more understandable, and also go into some detail about the definitions of who meets those thresholds for reporting for the beneficial ownership reporting requirement. So I'll go ahead and get started, and we'll go into these topics. So what is beneficial ownership reporting? Well, effective January 1st of 2024, many companies in the United States have to start reporting information about what is called their beneficial owners, which we'll go into in a little bit more detail. What does that term mean? But it's ultimately those individuals that own or control the company. And the agency that's now requiring this is the Financial Crimes and Enforcement Network. They were the same network out of U.S. Treasury that implemented what's called the FBAR, the Foreign Bank and Reporting Requirement, several years ago. So the filing is simple and secure, and it doesn't cost you anything. But it can be a little bit confusing just because it's something new. So we wanted to make sure that you understand what the requirements are. It's also not annual in the sense that you have to do it every year. The only time you'd have to do it again or revisit after the initial filing is if you have a change to your information. At MPK Advisors and CPAs, we are offering the initial filing for you. But the subsequent filings, we encourage you to seek somebody such as an attorney or paralegal that's familiar and an expert in the requirements, because they get a little bit more subjective and nuanced with what triggers subsequent filing requirement. But the general overview of that is that if you have an address change or your owners change, you have an ownership change, that could trigger a subsequent filing. But we definitely encourage you to consult with legal advice in the future after this initial filing. And definitely we're not qualified to offer legal advice here, but we've chosen to offer the initial filing just to provide that value for our clients. Who has to report? So companies are required to report, and those that are required to report are called reporting companies. That term is used. So what is it that defines a reporting company? Well, it's any corporation, limited liability company, or another entity created by a state secretary of state, or any filing with a secretary of state under one of those agencies in one of our states, including some other territories. So that would be anything like we're familiar with in California when you go to file articles of incorporation or articles of organization, to file an LLC or a corporation, or even an LLP or some of these other types of entities. But the most common we see are corporations and LLCs, where this would trigger a reporting company requirement such that they have beneficial ownership reporting. Number two, you could have a foreign company who's also registered to do business in the US, and so there would also be required to report. So at the starting point, you have to determine, okay, am I a reporting company? That's step one. And if you're a corporation or limited liability company and you filed those articles with the Secretary of State, it's a high chance and a good chance that you'd have to file this. unless you fall under one of the 23 exemptions, which are listed out in the resources that are available from FinCEN, which I'll provide at the end of this presentation. I'll go over those as well. But believe it or not, 23 exemptions sounds like a lot. However, many people will not qualify for these, to be quite honest, because they're very select in terms of who is exempt from the requirement. So here's a flow chart that just gives an idea of that reporting company definition. So you can see there at the top, starting point, under what law was the company created? If it's a domestic US company, we would look to see, well, is it a corporation? Was it formed with articles of incorporation? If yes, then you can see there it may be a reporting company if there's no specific exemption that applies. If not a corporation, okay, well, was it created as an LLC? If so, yes, there may be another domestic filing requirement if there's no specific exception. If it wasn't a corporation or an LLC, then you have to ask, well, was it created by any document filed with a Secretary of State's office or similar under a state or Indian tribe? And if the answer is yes, well, it may be a filing requirement and a reporting company. And if not, you may not need to report. So an example of an entity that would not need to report is a sole proprietor. A sole proprietor is not required to register its entity with a Secretary of State. Some sole proprietors may register a fictitious business name, but that does not trigger a BOI filing requirement, just so you know. It's only when you actually file with the Secretary of State to form a legal entity, such as a corporation or LLC, does that trigger. Once you determine that you're a reporting company, now you have to determine, well, who is a beneficial owner? Because when it comes down to it, not everybody who works for or is an owner in the company may have to report as a beneficial owner under this requirement. So once you determine you're a reporting company, say you're an LLC or you're a corporation, you now have to determine who's the beneficial owner. So in the situation of a sole or single member LLC or sole single owner corporation and single shareholder, each of those almost always would have to report because they're 100% owners and in control of the entity. In the case of a single member LLC, it's called a disregarded entity for federal purposes. However, it is a legal entity formed with the Secretary of State, and so still would fall under the reporting company requirements. Now, once you determine that, and you are now determining who is the beneficial owner, that would be anybody who exercises either substantial control over the reporting company or owns and controls at least 25% of the company's ownership interests. So number one there, substantial control is a bit more subjective and is more nuanced. And so sometimes legal advice should be sought, especially if you're a larger company and you're questioning whether one of your officers exercises substantial control. The second requirement is a little bit more objective. Whoever owns 25% of the member or shareholder interests as in a corporation would be required. So in the situation of, say, husband and wife shareholders of a company or in an LLC, each of them would be required to report because it's over 25% interest, 50-50, or either 100% would require and trigger a filing requirement and would be a beneficial owner. So substantial control, these are some definitions of what that would look like if you, if say somebody is not quite meeting the 25% ownership threshold, but you're questioning, do they need to file? You would go to the substantial control as well and assess, okay, does somebody who exercises substantial control need to file? And here are some important points to consider. Again, if you're in doubt, I would definitely seek legal advice to get a final answer or at least an opinion on that, because these are nuanced legal terms and issues here. But At least there's some guidance that the FinCEN has released, and this is from FinCEN FAQs, the frequently asked questions that these are pulled from. So you can see there, anybody who exercises substantial control has the ability to influence decision making. So that could be a senior officer, which is typically the CEO or president, CFO, maybe the secretary or a COO. An individual has the ability to appoint officers or directors, could be a substantial control, and an individual who is a quote unquote important decision maker could exercise substantial control um, and be required to file. So there's a chart on the next page that gives some definitions, also from the FAQs, that helps to determine, okay, are they a senior officer? Are they a decision maker? And are they required to report because they exercise substantial control? So again, to summarize and recap this, you want to start at the point of, is my entity a reporting company? Which would mean, have I filed articles of organization, certificates of organization, or articles of incorporation with the Secretary of State's office? If the answer is yes, then you most likely become a reporting company. Secondly, you want to determine, okay, now that I'm a reporting company, I need to know who my beneficial owners will be, and these are responsible for filing. And that is again determined by that two-factor test, 25% or more ownership interest or substantial control. The 25% rule is a bit more objective and straightforward. The substantial control rule, a little bit more nuanced, but there's some resources to help you determine that. How to report. So once you find out who your beneficial owners are, you will report their information through FinCEN's website, that link right there. And this system provides a confirmation of receipt of the report once filed with FinCEN. And we're recommending our clients, of course, at minimum, download that PDF receipt and save it in their archives. But we'd also like a copy, if you're a client of ours, to store in your permanent file in order to make sure and check off that you've met that BOI filing requirement. Okay, so when to report, this is very important because there are specific deadlines associated with the reporting requirements, and we want to make sure you're aware of those and that those deadlines are met, because FinCEN has explained that they will have a penalty associated with late filing. We don't know how gracious they will be with enforcing this, but we don't want to test it per se. So we want to try to meet these the best we can and make you aware of those. So when to report, the deadline to report depends on when you filed to create your entity. Um, those that created an entity prior to January 1st of 2024 have until the end of 2024 or January 1st, 2025 to file this report. So if you filed for an LLC, corporation, or any other legal entity before January of this year, you have this whole year to file. And so the last day you can file would be January 1st of 2025. Now, if you form your entity during this calendar year from January 1st, 24 through January 1st, 25, you have 90 days to file this report. So say you filed and created your entity on March 1st, 2024. You would have 90 days from that date of filing to file the BOI report. Now, the last tier are those that create their entities after after January of 1st of 2025. After that date, any entity that's created will be required to file this BOI report for their beneficial owners within 30 days of the filing date. So those timelines get tighter, and it's definitely is a concern of ours, as it would be, I'm sure, for you all. And so we just want to make sure you're aware of those. And we anticipate that the secretaries of state will be sending notices of these filing requirements as you begin to file entities this year and forward, because it's a new requirement. And our understanding is that many of them will be making you aware of it through that, but we can't guarantee it. So we're just trying to get you the information in a timely manner as well. So this last slide are the exemptions for the filing. There are 23 exemptions, and as you can see, many of them are very, very select. And so the ones that typically may apply could be to our clients especially, and the most common exemptions would be tax exempt entities. So those are those nonprofits that officially have their exempt status with the IRS. They would be tax exempt, and so they're exempted from this filing requirement. And also there's an exemption for inactive entities. And I encourage you to look these up in the Small Entity Compliance Guide, which is a resource that will be made available to you in this recording, as well as a final slide will include the resources for each of these publications, so that you can also look to those as references. But inactive entity could also apply, and could be a more common exemption. But several of these are very nuanced and select, and so may not apply to you. And what we anticipate is that most of our clients will have to file these if they've created a legal entity with the Secretaries of State. So that really concludes the presentation. It's a new requirement, and so we understand it can be a bit confusing. So we definitely encourage you to contact our office. If you're concerned about your initial filing requirements, we will be offering that to our clients as a service to just make life easier, so you don't have the burden of that and have to worry about it. And in that process, if you're interested, please let us know. We'll get you an engagement letter that outlines the terms of the service, what we'll be doing for you, what to expect, and what we would need and by what dates in order to properly file the BOI reports for you. But if you choose to file on your own and you're a current client, we are asking you to just let us know, notify us, so we can make a note in our file and don't have to worry about meeting that deadline, because we know you'll be filing. And we would also appreciate you to send us a copy of your filing if you're a client, to save it as well in your permanent file, so that we know that it's been taken care of. So we appreciate you taking the time to review this presentation. I hope the information was helpful. We will have some resources, like I said, on our website regarding the BOI filings, including this presentation. Just so that you're aware of it. If you do have any questions, feel free to contact us at our office at 951-763-7970. That's our main line, and we'll be sure to get you answers where we're able to, or refer you to some trusted advisors that can help you. So have a great evening, and again, we appreciate your time. Thank you.